Hey guys, welcome back to another weekly watch where we go over all of our given setups, levels, news, earnings, everything going to the new week for our trading style with option scalping. Now, this is going to be a unique week here. This is not just a normal week. We have a potential circuit breaker start of the morning tomorrow morning, so we're going to have to be very, very on our toes and cautious. Not an open morning trade kind of day. For those who are newer to trading, not understanding what that is exactly with the circuit breaker is going to be basically a certain point move. There's three stages, three levels, if you will, 7 point, 13 point, and a 20% move. Certain degrees are going to cause certain levels of halting, what we call halting in the market. At a 20% move, the whole market will shut down unless it's past 3:30 in the afternoon. Okay, so that is a very realistic occurrence tomorrow, given the level of sell-off that we do very much so need, but in the accelerated, rapid profession in which it has occurred. Okay, so going into tomorrow morning, that's going to be something to be very aware of. Off open, potentially should be completely being cash on any open trades with the inherent large amount of risk due to the market volatility and movement that we've gotten from this over the weekend with the tariff implementation. However, we'll go into this more as the video progresses. Let's start off with the normal start of the video here with our earnings. Nothing really relevant. Just always show it here for anybody that wants to see it. So that's going to be your earnings report. News, however, this week, pretty significant. We do have a lot of earnings news this week. So Monday morning, not a lot. 10:30 a.m. FOMC member Kugler, 3 p.m. consumer credit. Tuesday, 6 a.m. small business index. FOMC member daily speaks at 2 o'clock to 4:30 at close. AP weekly statistical bullet. Wednesday, we do have a little bit more news. At 10 a.m. you have final wholesale inventories. 10:30 a.m. you have crude oil inventories. 11 a.m. you have FOMC member Barkin speaks. At 1:01 p.m. you have 10-year bond auction. At 2 p.m. you have FOMC member meeting minutes. All right. Thursdays we're going to have a lot of news at. So Thursday at 8:30 a.m. we have core CPI-MM, CPI-MM, CPI-YY unemployment claims at 8:30 a.m. an hour before open. At open on Thursday we have USD FOMC member Logan speaks. 10 a.m. FOMC member Bowman speaks. 10:30 a.m. natural gas storage. 12 p.m. FOMC member Goolsbee speaks. FOMC member Harkin speaks. 1:01 p.m. we have 30-year bond auction. At 8:30 a.m. on Friday we have core PPI, PPI-MM. And then at 10 a.m. we have prelim UM consumer sentiment, inflation expectations, and then FOMC member Muslim speaks, FOMC member Williams speaks at 11 a.m. So quite a lot of news this week, quite a significant degree of information. So it's going to be something to be very aware of going into this week. Is to be just very on your toes this week, right? Starting off with the levels on the market, obviously a crazy gap here, right? We can see that 4-hour chart. I'm not going to spend too much time because I've already made this video and then an audio issue happened and I lost the recording twice. So I'm just going to try to zoom through this and give you all the information very rapidly. So if you want to go back and record and listen to it for the levels, just go ahead and do so. 48.32, 48.0825, 47.3125. Gap start and end. Start is at 46.52 to the downside. To the end of that at 46.1375. We have a key level in between that at 46.3450. If we see continuation even further down this, we're going to see 45, 48, 45, 29, 25, 44, and 59, 43, 23, 50, 41, 25. Okay, sorry, 41, 22, 25, rather. My mistake. How do I come up with these? I go back and I look at all the support and resistance levels that cause and create levels of areas of respect, which i.e. turn into key levels and our levels have charted here, right? And it transversely converts over to every given underlying or indice across the market. It's all the same fundamentals. Okay, so it's always the same exact strategy on how you do that. So I'm not going to go into in depth on that. It's a weekly watch list video. So what we're going to break down here is the levels for NQ. So NQ, we have a very similar structure. 16,448.50, 16,324, gap started, 16,256.25, gap end, 16,118.75, 15,708.75, next level, 15,268.75. Any continuation down, I'll have 14,140.50. Key watches for the week. Main watch is going to be Tesla, Nvidia, Meta. Side watch would be Apple and Google and I believe Microsoft. Google's going to be on the lowest of the list, though, because it's just kind of a crazy stock, and I'm not really the biggest fan of the approach of it. It's just not the best. So going to Tesla, looking at this either downside or upside, gapping, right? Fundamentals, gapping creates an unfulfilled order block region on a given underlying or index. So for the fact that this is an unfulfilled order region of about 15 points, I will be looking at upside and downside, both clean ranges, right? Because we skipped the whole range. So 225 upside, 230 upside, and 235 upside. Low downside 210, 52 down to 210. I do like this at potentially the low pre-market at 214, probably 215 level itself. And 210 again, 205, 200 for the week to come. Okay, quickly going over it. A lot of different levels here, a lot of great selection to take there. Be very aware and be on your toes this week. Again, can't stress it enough. Looking at this at the 490 level here, 490 up through continuation to the 490, 420 as a potential separate setup at 490, 420 cents into 495. Looking at downside here, strictly likely around the 470 to the 465 range because we have fulfilled this in the pre-market. Meta was incredibly weak, pretty much everything but Nvidia or Apple. So very weak. 470, 465 is the next level. It's down to 460. Okay. Looking at Nvidia here, Nvidia going to be downside pretty much more biased. It does have a gap just like the others, but I just don't like Nvidia as much. The upside like in this area, I just don't like it. It's Nvidia, you know. So this is a tricky stock, not anywhere near as smooth and predictable and volatile and follow through as much as those other two, Meta and Tesla. So 90 potentially upside. It's going to be depending on the market conditions coming off open and how we end up moving tomorrow, where we're at. Responsibility as day traders to come up with all these setups and then identify the divergent strength or weakness that they all have to the market, which one's weakest, which ones are strongest, and which ones are approaching their setup correctly with those said biases, right? So looking at the 85, 70 cent down to 85 with continuation to 84 and even potentially down to 80 cents, given their correct weakness and continuation of this given sell-off with the tariff implementation from the Trump administration, and then looking at upside again, 90 through 90, 30 cents to scale out, 90, 70 cents is additional upside scale out. Not looking for much. Upside does not seem like the bias at all this week, so that would strictly be a scalp. Looking at the next setup would be on my side watches. These are my finalities of the week watch. So looking at Microsoft as my top pick for a side watch here. I do like the downside at 340, strictly a scalp really, because I just don't have a whole lot of key levels here personally. So 340 right here, 341.27 maybe as a separate trade through 341, or have it a continuation move through 340 with the right continued weakness. Okay, so two separate potential setups, maybe one singular setup there. Second watch is going to be Apple again, top right next to Microsoft there on downside here. Looking at the gap continuation of the continued of gap fill here rather, sorry. Going into 175 through that into 174.31 cents down to the gap end. Completion of that set gap at 173.42 cents. Again, this is the gap fill down. This is a pretty quality good setup here. If anything, it might even be shifted over to the main watch list because of how weak it really is here. Okay, so after Apple, I'm looking at Google. Again, like I said, not my best setup, not my favorite. However, I do like this into 135, potentially the low at 137 with the right weakness. But if this can come off open at 135, this is actually a pretty solid level. I will look to maybe potentially move the ranking of this up, just depending on how it approaches, right? So it's going to just really be case-dependent, situation, scenario-based. Again, with all of these, really. It's going to be what do we end up getting off open, right? I think we're going to get some continuation, but I want to see the right decisive movements here, and I don't want to see an excessive movement because then we're looking at a risk of circuit breaker, and we obviously do not want to be in a position on a position where the market's closed and we are in overnight swing. You know, we're basically force swinging some serious position sizing on contracts. That's a great way to get liquidated, right? That's some serious shit right there. So be very smart here. I might probably going to look to size down half to everything on this coming Monday, depending on the right approach and how we end up moving. If we get chopped, if we get the right decisive movements, it's going to be an interesting day to say the least. I haven't got much of a grasp on how exactly I want to go. Fundamentally, just risk excessive, risk excessive, risk excessive. That's all I'm thinking, right? Like, let's just be smart here, right? So that's going to be the weekly watch list, this week. So a lot of downside, definitely for sure. And if anything, I might even look to swing downside if this Monday morning shows the right variables, if it ends up having continuation. And this isn't just some over weekend. We've had this in the past, sell off and then a bounce. No. If Monday has continuation, yeah, this would be a pretty interesting week to call some swings for sure, like Tesla puts, 200 puts, 210 puts, ride it all the way through the 200 level and catch a pretty interesting move for sure, to say the least. So this will be a good week, hopefully, if we can see some continuation and this actually ends up being the sell-off we've needed for some time now. I know people don't like to hear that. A lot of people in 401ks, very foolish thing to do, obviously, in this day and age in 2025. That's a 90s-based business model, a 90s-based retirement model, 70s even, 60s. In 2025, nobody should be doing those, especially if you hadn't learned from '08 or the dot-com bubble in the 90s. Then I guess, yeah, you're asking for it. You should have gotten hit by this. So, you only lose with those. With this is why we've stayed liquid. I liquidated in the past when the markets were at highs. Everybody seemed to think they'd go higher. That's just not how markets work, guys. So be smart. That's why we day trade. This is why we do what we do. All cash, manage positions right, manage risk correctly, and you'll end up profitable. It's a very simple structured strategy and systematic approach. very easy to win if you have discipline. So come into that mindset with this week, guys. Don't oversize. Don't manage risk poorly. Manage it wisely. Don't be anxious. Be calm. When the market's going chaotic, you need to be collected and disciplined with how we've always done it. Nothing changes. This is just another movement in the market, as always. Just a little bit bigger than usual, and it's just another sell-off to catch and ride down the wave. Just like we rode the up wave, we'll ride the down wave. So let's do this week good, guys, and let's do it like we always do and kill it. Discipline, locked in, and let's lock in and make this shit happen. So have a great week, guys. Thanks for watching. I'll see you next weekend. Like, comment, subscribe. Peace.